Good morning and a warm welcome, Sage here. You're watching Kalkine TV live from Sydney, and this is the Global Markets Roundup Show. The benchmark US indices closed flat on Thursday, 19th of August, a day after the Fed minutes revealed broad consensus on pulling back monetary stimuli, but yet to set a specific start date for the withdrawal. The S&P 500 was up 0.13%. The Dow Jones fell 0.19% and the Nasdaq Composite rose 0.11%, and the small cap Russell 2000 was down 1.22%. The Federal Reserve's July 27 to 28 meeting minutes were published on Wednesday afternoon, leading to a considerable pullback in the stock market. The revelations dealt a blow to the hopes of those hoping to capitalise on low interest rates, and the effects were also felt in the global markets. Investors also weighed the threat from the Delta virus that could potentially throw the economy into another downturn. In addition, the Labor Department's latest data on Thursday showed that the number of Americans filing for jobless benefits claims dropped to a 17-month low last week. The figures fell to 348,000 in the week ended August 14th, more than a 50% decline since January 2021. However, strong quarterly results of companies kept the spirits high in the stock market. Technology and healthcare stocks on the S&P 500 saw notable gains, and 5 of the 11 sectors of the index stayed in the green. Energy and the basic materials stocks were the bottom movers. And now let's move on to the newsmakers. Shares of retail Bath and Body Works jumped 9.95% in the intraday trading after the company reported strong quarterly earnings, topping the analysts' forecasts. Its net sales rose 43% year on year, while its gross profit came in at $1.4 billion. Stocks of retail store operator Macy's surged 17.99% after reporting strong second quarter results. The company's net sales came in at $5.6 billion compared to just $3.5 billion in the same quarter of the previous year. Its net income was $345 million or $1.08 per share. Retailer Kohl's posted a 30.5% revenue growth year on year. Its net income was $382 million or $2.48 per diluted share. The Kohl stock ticked up 6.09% in the intraday trading. And meanwhile, the car maker Toyota Motor shares tumbled 4.05% after it announced a production cut by 40% in September due to the semiconductor shortage. And moving on to the global markets outside the US. Oil fell to its lowest levels since May, while the US dollar surged into a 9-month high as rising COVID-19 cases worldwide and the prospect of a looming Federal Reserve taper threw cold water on the risk appetites. The MSCI World Equity Index, which tracks shares in 45 nations, fell 0.73%. European shares tumbled to their biggest daily loss in a month on Thursday as a slump in commodity prices dragged down the mining stocks, while luxury stocks were hit by a Chinese wealth redistribution push. The Pan-European Stock 600 was down 1.6% at a 2-week low, with mining stocks sliding 4.2% in their biggest one-day decline since March. And now let's take a small break, but please stay tuned with us on Kalkine TV. Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine. A warm welcome back, and I hope you're enjoying your morning so far. This is Sage. You're watching Kalkine TV, live from sunny Sydney this morning, and this is the Global Markets Roundup show. Let's now move our focus over to the Asian markets. And Japan's Nikkei share average fell sharply on Thursday to hit a 7-month low following a report that Toyota Motors plans to slash its global output by 40% next month due to a chip shortage. The Nikkei fell 1.1%, plunging below its July trough to reach a level last seen only in early January. Chinese shares ended lower on Thursday, dragged by consumer staples and financial stocks, as a gloomy economic outlook soured the investor sentiment. And the blue chip CSI 300 index fell 0.7%, while the Shanghai Composite Index lost 0.6%. South Korean shares closed nearly 2% lower on Thursday, its lowest in more than 4 months, as worries about the Delta coronavirus variant and the US Federal Reserve's tapering dented risk appetite. The Kospi ended down 1.93%, marking the lowest close since April the 1st. It also posted the sharpest daily fall since February 26th. And now let's take a look at the Australian share market's performance. The local share price index futures rose 0.5%, a 53.6-point discount to the underlying S&P ASX 200 index close, and the benchmark fell 0.5% on Thursday. Retailers Adair's medical device company, Cochlear, waste management services provider Cleanaway, poultry producer Ingham's and property group Stockland, Sydney Airport Group and telecommunications company TPG Telecom are a few firms that would be releasing their earnings on Friday. And the risk appetite of the US investors worsened amid the fast spread of COVID's variant, resulting in the benchmark 10-year yields falling to 1.242%. The safe haven dollar rose to a 9-month high amid prospects of earlier ending of the Fed stimulus, and the dollar index rose 0.46%. Crude oil fell for the 6th session in a row as investors were concerned over the fall in demand due to ongoing pandemic restraints and a rising US dollar. The Brent crude lost 2.6% and the West Texas Intermediate fell 2.6% as well. The energy stocks such as Woodside Petroleum and Santos could trade lower on Friday. Gold prices fell over expectations of the early policy tapering by the Fed and weighed on the sentiment, and spot gold fell 0.5% and the US gold futures settled down 0.1%. Gold stocks such as St Barbara and Newcrest Mining could trade lower on Friday. And the benchmark iron ore futures in China extended losses for the 3rd session in a row. The most traded iron ore futures on the Dalian Commodity Exchange for January delivery finished down 7.2%. And last but not least, benchmark copper on the London Metal Exchange was down 1.6%. And thank you for joining us on that report. That's all for now, but stay tuned with Kalkine TV for more live market updates. We'll be back with more of the news on the markets, economies and diverse themes and sectors. Sage signing off.